What's going on, apes? Welcome back to the channel. What a crazy day today. No other way to put it. That's probably going to be the headline of this video because that is honestly the truth. We got whipsawed with AMC as well as the broad markets. A major sell-off. We are seeing a slight recovery, but we hit lows of $438 on the S&P 500. This was a dramatic move based off of some rumors around the Fed and a scheduled Fed meeting. Well, it was unscheduled. It was not supposed to happen. Now it's happening on Monday. A lot of speculation and fears about a possible rate hike, as well as an invasion of Ukraine by Russia coming here before the end of the Olympics, before next Friday. You have oil prices going up. You have gold going crazy. We hit a lot of trades today based off of this, and I hope you guys did as well. But if you did not, rest assured this is not the time to FOMO, and you will have your opportunity. We need to go over everything that you guys need to know here in this video about the macro environments, the things that I just mentioned, as well as directly for AMC. So if you guys find education, if not simply entertainment out of this video, hit that like button for me, subscribe to the channel, comment down below. Most importantly, go ahead, follow me over on Twitter. You guys will get updated on any major news that comes out over there. And if you want access to all of my trades in real time, link for that in the pinned comment down below. So diving into this video, quite literally, the S&P is starting to take a nosedive the last couple of minutes. We have about 3 minutes left of trading. The most important thing I think that came out today around AMC specifically was this tweet from Adam Aaron, basically calling out the short interest of AMC. He says, in January, the officially reported short interest in AMC rose by 13.8% from 94.8 million short shares on December 31st to 107.8 million shares on January 31st. I still have an interest in 2.3 million AMC shares, so I hope those short sellers are wrong. Only time will tell. And obviously they are. And like he said, time will tell. But this is definitely stirring up a lot of activity, to say the least, within the ape community, but as well as financial media. I'm sure there's going to be a lot of people covering this, and it should drive a lot of bullish attention to AMC. So that is definitely a positive thing. Probably the biggest announcement we got from AMC today, biggest news catalyst for AMC in particular, as far as the whole Fed situation. You have this article, like I called out in the last video, but it says, why is the Fed suddenly holding an unscheduled, expedited, closed board meeting on Monday? You also have the FOMC minutes that come out next week as well. So why are they holding this meeting? Well, it says, with Fed speakers and their media proxies scrambling to walk back St. Louis Fed, Jim Bullard's calls for an inter-meeting liftoff and uber hawkish rate hike trajectory. It is notable that all of a sudden the Fed has called for an expedited closed board meeting on Monday, February 14th at 11:30 a.m. So if the Fed does raise rates at this meeting or shortly after, the markets are going to freak out. They're going to freak out. You could possibly see a 5 to 7% down day if they do that, because it is so unprecedented, and it will show that the Fed is finally acknowledging they are behind the curve and they need to act even more aggressively. On top of that, on top of this that was notified to investors today about this meeting, you also have the US government saying that the invasion of Ukraine could come even before the Olympics are over. And they sounded a lot more hawkish today, saying basically, we're not going to come rescue you guys if you're in Ukraine when war breaks out. We're giving you guys this notice now. And they said to be mature and to take this opportunity to get out of the country. So no, it doesn't look like World War III is coming, but to sanction a country like Russia that has a lot of oil exports, that has a lot of things that are tied to our inflation, as we know, and oil is like 15 to 20% of the CPI report. And you've seen oil go crazy today. So that would be the biggest impact, is the oil demand. Europe gets about 40% of their oil and natural gas from Russia. And if they cut that off, you're going to see that added bonus, for lack of a better word, to CPI, and that could also prompt the Fed to be making this meeting on Monday. It's very well possible, this is a tinfoil hat, that the US government knows the invasion could be coming over this weekend and that the Fed would raise rates on Monday to basically try to counteract the oil that would go crazy, as well as obviously the inflation that is going on right now. So those are really the two big headlines that destroyed the markets, and justifiably so, right? Fed comes out, like I said, you're going to see a huge drawdown in the markets, and that would be unprecedented. The last time it happened was 2015, like this says right here. And it was not long after the expedited FOMC meeting that the Fed raised rates, about 1 week or so, give or take, maybe a little bit less than that. So keep all of this information in mind. Not time to panic, but certainly AMC, if these events do unfold, would fall in the short term, and then we're even closer to the MOS because liquidity will be getting restricted. Now, as far as the actual data that you need to know for AMC today, we're looking at 22.07% short interest of free float. Current shares that are sold short, 113.39 million. Cost to borrow max at 2%, and the share utilization is at 100%. Days to cover at 2.51. So that is also looking very encouraging at the moment. And we're sitting at levels of short interest we could have only dreamed of, a couple weeks ago. So going from 16% to 22%, I will take that. As far as the positive order flow for today, it's only at 31%. Not as much actual activity today by institutional investors as far as the options are concerned. Yesterday, you had 72% positive order value. Now, as far as the max pain, that was at $18 per share. It does look like we closed above $18 per share, sitting at $18.85 per share. So that's good to see that we were above the max pain by today. And as far as the Stonko tracker data for next week, you have 35,000 calls that are in the money, 228,000 calls that are out of the money. That is a substantial amount of option activity that is out of the money for next week. So things could evolve and things can turn positive very quick or negative. If they do turn positive, that will be a great thing for AMC. On the put side, 91,000 puts that are out of the money, 34,000 puts that are in the money. So same thing over there. There is some level of buying power that could come from the puts running from into the money, out of the money if we do see a bullish rally next week. So keep all of that in mind. As far as the Fed futures expectations, you're looking at about 50-50 for March 16th, in between 0.25% and up to 0.75% rate hike increases. The odds of this have actually come down like we went over in the video yesterday. They were a lot higher, with about 89% of people believing we were going to see a 50 basis point rate hike by March. So not a lot of good news to give you guys here in this video, besides Adam Aaron that did shock a lot of people, a lot of news analysts as well, by coming out with that tweet. But that is pretty much what you guys need to know. As far as AMC in particular, the actual technical analysis, it does look like we are in this technical breakout. We are well above our 20-day simple moving average, and we did close above $18 per share, which was our next level. On top of that, the next level we need to break out above is $20 per share. Intraday yesterday was not a huge resistance level. We actually broke out above that fairly easily. We only tested it once and then shot past, but then the market started coming down. So it looks like we shouldn't have too much trouble around 20 bucks, but I mean, it's all going to depend on what comes about next week. If there is no rate hike increase and unprecedented, I mean, it would be bad. If that does not happen, that's going to be a very bullish thing, I think, and the market should rally on that. If Russia decides to take the diplomatic approach, you could also see a rally on that. So there's a lot of give and take. If these events don't continue to materialize and get worse, the market should find that as reassuring, and we should be able to bounce. And on top of 20, next level would be 23, and then 25, and then ultimately $30 per share. So thank you guys for watching. That is really all you guys need to know, and I hope we got through this fast enough and you guys can get on with your weekend. So thank you guys for watching. If you guys want access to all of my trades in real time, link down below in the pinned comment, as well as links for free stock with Moomoo, Public, and Webull in the description of this video. Thank you guys for watching, and I will see you in the next one.